Good day, everyone. This is Patrick from UsdJpy Code Trading System, and it's Saturday, the 9th of December, 2023, and it's the weekly technical analysis for spot gold and dollar yen for the second week of December. And right from the start of the week, we were checking to see whether it was possible that gold would get to 2100 after closing right below the previous swing high, previous all-time high. And it did just that right at the start of the week and day on Monday, and spiked through all the way to set a new all-time high at 2143. And right after that, it just pulled back and sold off back down to the 786 on the Friday, on NFP Friday. So that's a drastic spike through, and then retrace all the way back down lower, initially back to this swing high. And for the dollar against Japanese yen, it was only Thursday where it started to fall, and it fell hard, spiked down into the 142 round figure area before recovering and pulling back up above key support with non-farm payroll data. So quite massive movements last week for both these pairs, and all due to US dollar moves before the Federal Reserve this coming week. So we'll see what happens this coming week with the FOMC rate announcement and statements, and as well as some of the central banks with Bank of England and ECB as well. And let's review last week's key trigger with the non-farm payroll on a Friday, and look forward for this week with CPI data and all the central bank announcements, which is going to be a key week for all these major pairs. All right, let's take a look at the preview. Well, this week started off with the RBA maintaining their rates. They did not change, and as expected. And it was dovish for the Aussie dollar as that continued to weaken. And anyway, it was due for retracement after a strong move up. And US dollar is continuing its recovery with some support from the ISM services figures, which came out slightly better than expected. So that fuel the recovery for the US dollar, which we'll see later on for the DXY. Then the key one on the Friday non-farm payroll jobs came out much stronger than expected, and along with the other hourly earnings and unemployment rate as well. So job market is still slightly strong, which may influence the FOMC for next week as well. So this coming week is a critical one, with all the major central banks announcing, and also US CPI coming up, and followed by the PPI. So slightly lower than expected, except for the PPI forecast is higher than the previous actual for November. So they're expecting an improvement in the PPI figures, and that may impact CPI later on. But the three central banks will likely not change rates. It's unlikely they will change, so they'll likely just leave rates as it is, and key will be to watch out what they announce or state during their press conference for the future, how long the rates will be maintained, or whether there's a clue as to when they're going to start to cut rates, which at the moment is likely not as soon until the second half of the year, next year. So critical week this week, and there'll be high volatility as expected, and we'll see what the price action is going to be for the US dollar. And also all the major economies are announcing their flash PMI figures at the end of the week. But all eyes on US dollar with these three major central banks announcing and together with the inflation figure. Okay, so we'll have to watch out for this next week. And let's go back to the analysis. Let's begin with spot gold. And right from the start of the week, let's go down to 4-hour time frame and maybe even the 1 hour, just to see where the spike was. It's just right at the start of the first hour, and a massive spike through here from this breakout over almost 700 pips for pulling all the way back down for the day. Almost 500-600 pips as well. So that was right at the start of the day and week, and just taking advantage to grab all the opportunity to form a new high before selling off. And after that, it continued to sell off. This was still a 4-hour time frame and pulling back. And right into the previous swing high before consolidating and then falling on the Friday non-farm payroll news. So that was just a bear flag for the drop right into a 4-hour 200 EMA at the 786 pip. Right, let's move back to the daily and take a look on the weekly time frame. That was a massive long upper wick with a very bearish body to test and close below the previous week's open. So there's a very bearish sign here, and there could be further bearish momentum after a pullback, and there's still some room to drop. See how much more it's going to pull back, and we'll see how far it's going to pull back first at the start of the week, and especially with some US news early in the week. Go back to the daily, and after this spike, I think we can move the fib retracement here for this swing move up, and already close below the 62 fib retracement right above the 2000 round figure, spiked through it on the Friday. And there's still some room to drop further into 1975 again. That's where the 78.6 fib retracement is. So could be some more bearish momentum. And all depends early in the week with the CPI figure. And of course, the key one will be the Federal Reserve's rate announcement, rate decision. And then there's further US news, retail sales, and the flash PMIs. So let's move this major support now down to this area at the where the daily 55 is as well, aligns with the 786 and the 1975 round figure. There's interim support. You can still leave it at 2500 first. Oh, sorry, the 2000 round figure. Major resistance now likely at the 2050. Because of this spike here. So we'll see if it's going to consolidate or perhaps form a massive head and shoulders for the move later in the week and the month. Let's see. So let's compare this with the US dollar index, where it should be recovering. It's an inverse correlation. And here's the US dollar index, DXY, where it did recover and blocked by the daily 200 EMA exactly, and pull back on Thursday into the 103 round figure, and then bounce back up on the Friday with the non-farm payroll report, but still finding interim resistance at the daily 200 EMA and not able to reach the 104 round figure yet. And if we take a look on the weekly time frame, there's a possibility that there'll be further recovery and retracement back up after this hammer on the weekly time frame, which resumed on last week. So let's adjust this. We can adjust this fib here now and turn it around for the retracement. So from here, it did hit the 38 fib retracement. And beyond that, let's mark the next significant resistance at the 50 fib. That's where this previous swing low was. So that could match up well. So there could be some pullback, and depending on these critical news for next week, we'll see whether there's going to be a continuation or just a consolidation. So the interim support now is going to be at the 21 fib along with the 103 round figure. Major support is still at this level at 102. All right, let's see whether this starts to look like an inverse head and shoulders pattern for some recovery. And we'll see whether it's able to break through the 50 fib and get to the 105 round figure. So all depends on the CPI data early in the week to see how much this potential pullback could be. And then of course the Federal Reserve's statements and announcements. All right, so with the US dollar recovering, the euro and all the major pairs along with spot gold has been also retracing back down. All right, let's go back to the analysis. Let's move on to dollar against Japanese yen. Right, resume its bearish momentum and retracement after getting to almost the 152 round figure and forming this double top here. Breaking down and resume from the start of the week after some consolidation, and Thursday was the major breakdown. Let's see if we can update the fib, and let's check the weekly time frame first. That was a massive spike down to almost reach the 62 fib area just above the 142. And this long low wick as opposed to the long upper wick for spot gold, so there could be some bullish recovery here, but it looks like there's going to be consolidation within last week's range. It's a massive range here. So let's update the fib. We can do that now with check this retracement, and let's compare this with this reversal move here from this previous swing low. Yes, from this previous swing low, it's back through that low, back through this low, initially at 146, and then all the way down to hit the 138 fib extension. It's below the 142, so bounce back up into 145 again. So at the start of the week, there could be some support and recovery back up to 146, maybe 147. And then we'll see where it's going to move to, or this is just going to be a massive consolidation range here. because that is already 500 pips. So let's move this major support to the 162. Oh, sorry, the 138 and the 142 area. Interim support at the 144 along with the daily 200 EMA. And interim resistance at the 147 at the 62 fib retracement. Major resistance right above at the 148 and the 50 fib with the 55 EMA. And this previous support band and turn to resistance now. And that's where it failed to break back up and started to fall from there. Okay, so critical week for the US dollar. So you got to watch the DXY as well as the dollar yen for all the major US news coming up this week. Inflation figures and FOMC. And it's not done yet till Friday. All right, so do watch out for the increased volatility and trade safe. Have a safe week and a good trading week, and cheers for now.